Good afternoon, everyone. Today we'll be discussing Ind-AS introduction. In Ind-AS introduction, we'll be discussing the roadmap to Ind-AS. So we'll start on this topic. The details of this topic, you can also buy a book, Short Summary to Ind-AS Part 1 on Amazon. It is available for 17.95 on Amazon. So if you want to read the book, you can read the book or listen to YouTube channel. So to start with, India has converged Ind-AS. When we say converged, it means that there are carve-ins, carve-outs, and removal of options. There are 39 Ind-AS, 200 countries in the world, out of which 160 countries are on IFRS. The GDP is 95 trillion US dollars, and more than 50 trillion US dollars is on IFRS. There are more than 50 gaps. There are 40 global standards, 16 IFRS, 24 IAS, 15 IFRIC, and 5 SIC. When we say carve out, carve in, carve outs, and removal of options, carve out is adding, moving out of the IFRS. There is, to give an example, there is a long term loan. There is a breach of loan and it is repayable in 1 year. Before the board meeting, the breach has been rectified. As per IAS 10, events occurring after balance sheet date, it is a non-adjusting event. Disclosure has to be there, and loan has to be shown as current as per Ind-AS 10, it is argued that India is a developing country, and if the loan is default is made good, it would be an adjusting event, and the same would be shown as non-current. This is a carve out from IFRS. There are 7 to 8 carve outs. Carvin is adding more to the standards. Thus, if IFRS has stipulated a particular computation, Ind-AS has added more to it. Example, fair valuation. Removal of options is removing the options out of IFRS. This provides a task of removal of options from Ind-AS. So, under Ind-AS and PNL can be prepared by function method or nature method. But under Ind-AS, the same has to be prepared under nature method only. This is a removal of options in Ind-AS. Features of convergence to IFRS: global approach versus Indian approach, fair value versus historical approach, reports versus accounting, substance over form. I'll give you the different IFRS as well as Ind-AS. IFRS 1 to 16 is Ind-AS 101 to 116. IAS 1 to 41 is Ind-AS 1 to 41. IFRIC 15 and SIC 5. 40 global standards and 39 Ind-AS. On 16 to 2015, MCA had notified 39 Ind-AS. On 33 2016, Ind-AS were notified for NBFCs. Ind-AS applicability. Ind-AS is applicable to all listed companies incorporated in India or listed anywhere in the world. The net worth computed as per Section 257 of the Companies Act. Unlisted companies having net worth of greater than or equal to 250 crores are Ind-AS is applicable. If the net worth is more than or equal to 250 crore in 1 year and less than 250 crore in another year, Ind-AS would still be applicable. Once you've started adopting Ind-AS, you cannot move out of Ind-AS in the subsequent years, even if the net worth has fallen. Audited accounts only. Net worth has to be computed as per the audited accounts. Net worth would be computed as follows: paid up share capital plus reserves plus securities premium account minus accumulated losses minus deferred expenditure minus miscellaneous expenses not written off. This is prescribed in the Section 257 of the Companies Act. Standalone net worth as on 31st March to be seen. No turnover criteria is there. Ind-AS is applicable to associate JV holding subsidiary of companies. If NBFC is a holding subsidiary, JV or associate of a non-NBFC, then Ind-AS would not apply if the net worth is less than 250 crore. Not applicable to SME listed companies on NSE merge or BSE merge. It is voluntary applicable. Banks, insurance companies, non-corporate associates, they cannot voluntarily apply as well. If the entity is a subsidiary, holding or JV is a bank, then only for the sake of consolidation, Ind-AS would be applicable. Now we'll share the downstream and upstream. If on subsidiary Ind-AS is applicable, then it is applicable to holding. If on JV Ind-AS is applicable, then it is not applicable to the venturer. Uh, uh, if it is applicable to associate, then if the criteria is not met, it will not be applicable to the investor as well. Upstream and downstream, if it is applicable to holding, it will be indirectly applicable to the subsidiary as well. If it is applicable to venturer, it will be applicable to the JV as well. If it is applicable to investor, it will be applicable to associate as well. Now we'll be discussing different case studies. ABC is having a net worth of 100 crores and it is a subsidiary of ABC USA LLC. The foreign company having a net worth of 1000 crore. Advice on India's applicability. ABC Limited net worth is 100 crores, hence Ind-AS is not applicable. ABC USA LLC is a foreign company, hence Ind-AS is not applicable. Example 2, ABC India Private Limited is having a net worth of 300 crores and is having subsidiaries in Bangladesh and Vietnam. These companies are very small with a net worth of 50 crore. Advice on Ind-AS applicability. ABC India Private Limited, Ind-AS is applicable. Subsidiaries in Bangladesh and Vietnam, Ind-AS is not applicable, but subsidiaries would prepare Ind-AS financials for the purpose of consolidation. Example 3, ABC India Limited is a listed company in India. It has a subsidiary XYZ India Limited listed on SME Stock Exchange and also on associate, which is a bank, and also an associate, which is a banking company. Advice on Ind-AS applicability. On ABC India Limited, Ind-AS is applicable. XYZ India Limited SME Stock Exchange, Ind-AS is not applicable, and associate banking company, Ind-AS is not applicable. But both companies would prepare financial statements as per Ind-AS for the purpose of consolidation. ABC, example 4, ABC Limited is having an investment in ABC and Associate LLP. ABC is applying Ind-AS while preparing financial statements. Advice on Ind-AS applicability on LLP. ABC Limited is an investor. Ind-AS is applicable as mentioned. ABC and Associate LLP is an associate. Hence, Ind-AS would be applicable. Example 5, A Limited is a listed company, is an associate of ABC Private Limited. Net worth of ABC Private Limited is less than 250 crore. Advice on Ind-AS applicability. A Limited, since it is a listed company, Ind-AS would be applicable. ABC Private Limited is an investor and net worth is less than 250 crore, hence Ind-AS would not be applicable. ABC India is a listed company in India. It has a subsidiary which is unlisted NBFC having a net worth of less than 250 crore. Discussed on applicability of Ind-AS. ABC India, Ind-AS is applicable. Subsidiary unlisted NBFCs and net worth is less than 250 crore. Hence, Ind-AS is not applicable. So this we've covered the roadmap to Ind-AS. We'll be going through all the Ind-ASs in subsequent presentations. Stay tuned. Please like, subscribe the channel so that it reaches the students as well as members of the institute. Thank you.